Welcome back, it's Hima here, and I've got a chart of the week VIX update for you. Today's Tuesday, April 13th, 2021. Before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So what is the VIX? It's the CBOE Volatility Index. And volatility is a dispersion of returns. And the higher the volatility, the higher the risk of trading. The VIX is calculated based on price inputs of S&P 500 futures index options, and it's known as the fear gauge or fear index. So generally, when the VIX is rising, the market, the broad market like the S&P, is falling. The VIX can also be directly traded. Now we're going to look at this all on its own on the chart, starting with a daily time frame. And here she is. So this daily chart of the VIX has been very interesting this past year because of everything going on in the world, starting with the massive spike we had in the spring of 2020. And you can see it has steadily lowered since, right? The fear has been dissipating as the economy recovers, as COVID becomes more manageable, as vaccines roll out, and everything else. Now, along the way, there were a handful here, of big blips or rises in the VIX that coincided with market weakness. And even though the broader market trend may still be up, it's important to be ready for a rise in the VIX so that you can optimally trade whatever underlying you're trading, right? The S&P 500 big contract, or the E-mini S&P 500 futures, my baby. Or maybe you trade the NASDAQ futures or stocks or anything else. So let's hone in on the more recent price action, right? Starting with last fall. Now you may see these little crosses here. These little X marks the spot. Those are past forecasts I made. And you can see they were super helpful in attracting price to them at the time that they posted. They have two axes, a time and a price axis, both combining together. Now, my most recent forecast was for March 18th, and I actually posted a VIX update just like this. So you can check out your tribe chart of the week in the free Hima Reddy tribe to see that video. I warned, just like I am now, that the VIX might be turning higher, and it sure did. And it became very choppy and led to a little sideways action in the markets. Knowing when the market might go sideways or turn down is super important, right? So that if you've been buying and making profits going long on the S&P or stocks or futures, you know to stop doing that if the signs all congeal together. Now, students in my 4 zones RSI coverage system, you're going to love this because I just refreshed you on how I use my Jedi twist on price floors and ceilings. And based on that, there are 3 supports here. Okay, everyone here can see the levels: 1643, 1491, and 1338. My RSI 4 zone students are the ones who know exactly how I calculate that. And that was based on the weekly time frame, and I extrapolated it to the daily. So you can see here that in the past couple days, we have tested support on the VIX, which would equate to resistance in the broad market, and it's holding. All right, so that's part 1. Part 2 is that the RSI Power Zones continue to hover near the bull support power zone on the VIX. So there's a little bit of a room for it to turn higher. Now, price and momentum are 2 pieces of my trifecta, and the glue that kind of pulls them together into something really beautiful is time. And the way I use time is taught in the loss forecasting trading system. And if you know my methods, then you would be able to recreate the same analysis I'm about to highlight here, which is that there's an expectation for the VIX to form a low into tomorrow, April 14th. So how do we navigate all of this in the days and weeks ahead? Here's the key. If the VIX is able to post a daily session closing break below 1643, then I think the broad market uptrend is out of any danger, and we are going to continue to see gains in this market likely through April. Okay, I don't have a crystal ball. That's why I highly recommend you follow my short-term analysis in this Skinny on the Markets, where I detail the ES and NQ multiple times a week, and I provide stock picks. Now that's the downside scenario for the VIX, which would be the upside scenario for the markets. I always look at the other side of the coin, if you will. And the other side of the coin is, well, what if the VIX turns higher from here, right? Because the forecast is for a low. And whether that low is going to be just a short-term pause or a major low in the VIX, how do we quantify that? Well, the first thing would be if there's a move above the April 6th high. So I'm just going to put in a blue resistance trend line there. So that would be 1830, okay? If that occurs, then I expect the VIX to rise up back towards the 20 level. And this 1981 resistance on the VIX is calculated based on a couple things I'm seeing here. All right, so I'm going to zoom in real close on this so you can see the levels and jot them down in your own notes and be ready for the price action head. So again, remember, I'm purposely looking at the VIX when most others aren't. It's kind of boring. It's kind of sitting there. Market's been sailing higher for 2 weeks, easy. But that's the exact time when you should check in on volatility, guys, to be ready for the next turn and to be able to profit from it. Catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.